Good evening, everybody. This is Andy Petraza with Special Effects Academy on the start of the week session on the Forex Trading Room for November 25th of 2018. Thank you for joining us, and we hope everybody who celebrated it had a great Thanksgiving. And on that note, we will get started. Again, thanks for joining. We're going to cover our usual agenda. The results of this prior week, which was a very short trading week, at least for me, with the holiday that pretty much wiped out half the week as regards trading hours. I did take Thursday and Friday off. We'll continue with the currency strength meter for the past couple of weeks. Our fundamental announcements for the week that's coming, that's starting today. An analysis of the major pairs, any setups we see in progress, and a few parting words. Let's start out with our account performance. So the long-term ledger, we did have a drawdown of a few hundred pips here in this week that just ended, about 300 give and take. Again, it's been a very choppy performance this past month as the fundamentals have given rise to a little bit of upset on the technical side, which we will be covering in later slides as we adapt to the direction the market is taken. For now, we did have that drawdown there, and this week we'll do our best to start some of that recovery. On the short term, we did not trade much this week that just ended. We did have, similar to the long-term account, we had about 124 pip drawdown on this one. In our short-term trading, essentially with two trades that went against us by 75 and 50 pips, respectively. Not the biggest drawdown on the planet, but still there it is. And again, we are changing some of the direction we're applying to the market based on what it's doing right now. Opportunities for improvement. Well, as just said, we will be changing our approach given that the news cycle is having more of an impact on the currency pairs than technicals. So more to come on that. And as for the short-term account and any carry, there are no open trades at this time. Let's take a look at our relative strength meter for the past couple of weeks. So on the right-hand side, it just ended. On the left-hand side, the week prior, we can see that this week as a holiday, a major holiday week in the U.S., and the U.S. does account for a nice chunk of the market. We had less volatility, less volume. Implies less volatility in general. So we did have it drop back down to the 1% range. Let's take a look at the key movers. So the Aussie had a pretty bad week. It dropped against everybody except the Kiwi and the Euro. The CAD was middle of the pack. Swiss gained ground against everybody except the dollar and the pound. The euro was the biggest loser. It did give up a significant chunk of the gains it had made in the past couple of weeks. The pound had a pretty decent week, gaining against everybody except the dollar. The yen went back and forth in the middle of the pack as well. The Kiwi gave up a lot of ground as well against everybody except the euro. The dollar was the clear winner for the week. It gained ground against everybody else out there that we're comparing it to. Silver lost ground against everybody except the euro, and gold was actually a clear winner, gaining ground against all the other currencies as well as silver, excepting the dollar. And that is our relative strength meter for the past couple of weeks. Moving on to the fundamental announcements that we're going to have this week that is opening today. So we do have a Reserve Bank of Australia speech coming out, actually already came out about 45 minutes ago. We have the Brexit summit at the EU is ongoing as we speak, and there's been news coming out on that. Basically, the EU has approved the agreement, was the last I heard in news earlier today. But it is going to be a tough week as this agreement has to go through Parliament in the UK. And I can tell you right now that there's not a whole lot of support from the MPs there. So Theresa's probably not going to have the best weeks. Tomorrow, Monday, 9 a.m., we will have a speech by the European Central Bank's President Draghi. And we also have later on in the day at 1:30 p.m., and all of these times are in Eastern Time, U.S. Eastern Time, we will have the Bank of England's speech by Governor Carey. So that will bear looking into. I may actually be try to be online and see if there's anything tradable there. However, the Bank of England is not going to be the key driver this week. It's going to be whatever comes out of Parliament regarding Brexit. So this one might not be the best use of our time, but we'll see. On Wednesday, we have the GDP annualized out of the US, as well as the CPC, the core personal consumption, quarter over quarter. Might be a tradable event. I'll figure that out by Tuesday and let everybody know. Thursday, we have core personal consumption year over year out of the US. We have the monetary boards, Fed monetary boards minutes coming out at 2 p.m. That is probably going to be a tradable event. More to come as we define the calendar for the week. And we have the Tokyo CPI, excluding fresh food year over year, Thursday afternoon or early evening at 6:30 p.m. Wrapping up the week on Friday, we have CPI year over year coming out of the Eurozone at 5 in the morning, and that wraps up our week. Missing on the calendar is all the parliamentary discussions and voting regarding Brexit that are going to be happening in the UK. So we'll have to just be tuned to the news cycle for that. Let's move on to our major pairs, starting with the euro dollar. And here we go. So we have the euro, as mentioned, gave up a significant chunk of ground this week, bringing it halfway back to its most recent low. So that's what that is doing. As mentioned before, we're going to be paying more attention to the fundamentals and to the technicals as the year winds down. There's quite a number of events ongoing that are slamming the markets, and the technicals will always take a backseat when stuff like that is happening. So for now, all we can say is that the euro does continue significantly stressed against the dollar, and it is still hanging out near the bottom of the chart. It is at a prior level of support, as can be seen quite clearly there from that low that happened back in August. It's pretty much back at that point. It did have a deeper low throughout the course of November, but has yet to go back down to that level. It seems to have found resistance at the top in the last week and is now heading back down, but too soon to tell what its intentions are. The pound is our next pair, and this is one where I'm not even going to bother looking too much at the technicals. This pair is going to be moving based on whatever comes out of the Brexit discussions for now. Suffice it to say on the technical side that it is still very stressed against the dollar, and this is another pair that is hanging out near the bottom of the chart. USD JPY, quite the opposite. It is gaining ground on this chart. I should say the JPY is obviously weakening based on the chart from back in March of this year, but this is a chart that is trending very near the top. It has found resistance up there, almost near the, well, I should say it's the 114.50, close to 115, but round about the 114.50s is where it found major resistance and is now trending somewhere halfway between that top and its nearest low. It is also at major levels of support at this time, could go in either direction. The kicker is also going to be Brexit and whatever is happening in the Eurozone in general, as the yen tends to gain strength when money from Europe starts flowing into Japan as a safe haven. So this is one that will be reacting to what the other currencies are doing more than doing anything on its own. USD Canadian, the Canadian also continues to trade at one of its high levels of weakness against the dollar. So it's not quite at the top, but it is certainly closer to the top than to anything else. It has not really found support in quite a while and is continuing. It hasn't found resistance, I should say, in quite a while, and is continuing to head towards the top of that chart. Not going to be my favorite currency pair to trade as we wind down the year. It is just too susceptible to too many different things. We may get some nice fundamental trading out of it, but I'll have to wait and see what the new cycle actually brings. USD Swiss has found support at that trend line that you can see just bounced off of. It is still trading very near its highs around the parity level, the 1=1, and has yet to actually do a consistent and I guess credible attempt to go back to prior lows in the mid-90s. That will happen eventually, but we'll just have to be taking a look at it quite often to see when it's going to start that move. For now, leave it alone. Aussie dollar, this is our bottom feeder for the year. It's had a sustained drop since the beginning of the year, and only very recently, in the last 2 or 3 weeks, has it found some support at the bottom and started doing a credible retracement, which in the last week failed yet again. So we have it having bounced off of resistance at the 0.7325 level, which was a prior level of support back in, I'm going to say, June. So it failed to pierce that and seems to be now bouncing between that level of resistance and the Ichimoku cloud on the daily. Likely, we're going to have still some sort of push towards the top as the Aussie can't possibly be beaten down any further, except that, it keeps on doing it. But it is overdue for some sort of a correction, and market conditions in the U.S. may give it that opportunity. So again, going to be the news cycle and other similar things that move these pairs. The Kiwi dollar is the Australian's, I guess, stepsister. It tends to move pretty much in the same patterns. We can see the same thing happening here. It's reached a major low for the year and has had a sustained recovery since September through today, which has not totally failed. It might still try to head up. It's certainly looking more bullish than bearish at this point. And unlike the Aussie, it is very far from the levels of support at the bottom. So it is still extremely bullish and is worth keeping an eye on. Again, any weakness on the dollar, we could probably very well trade on the Kiwi and Aussie pairs. They'll probably be the biggest movers based on how far they'd already dropped. So more on that as it comes. Aussie Canadian, another one where the Aussie has staged a pretty nice recovery assisted by Canadian weakness. It failed in the last week, however. It hit a level of resistance there about 4 trading days back. Currently trading at a prior level of support resistance, still looking very bullish, however, though the MACD on the daily is starting to turn. So keep an eye on this one. If we see any significant weakness coming out of the CAD due to the crashing oil prices, that's another factor in the market today. This is definitely a pair to trade, but again, I have to wait for the right opportunity. Euro Swiss continues to be very sideways. It is trading at a level of support. Seems to be strengthening still against the euro, but the last, I'm going to say, 2 to 3 months have seen it weaken, much as the Swiss is weakened against other currencies as well. But still very sideways, still very near the bottom at near one of its greatest periods of strength against the euro. So keep an eye on it, but I don't like sideways pairs in general. Euro pound, this is going in every which way, in every direction possible as Brexit news come out. So definitely has to be traded on the news. The fundamentals are going to be taking a backseat, and indeed they have for quite a while as Brexit news dominates the direction of this pair. Euro JPY, very sideways. It doesn't look like the yen and the euro have really picked a direction given all the uncertainty that's happening in the Eurozone thanks to Brexit and a couple of other things. So this pair, which should have gone further down given all the turmoil, has really not caught a break and is still trading very sideways thanks to the, I guess, the balancing or counterbalancing of bad news with good every other day out of the Eurozone and the UK. At some point, once we have a decision, depending on whether it's good for the Eurozone, I should say, or not, we will see some movement on this pair in either direction. It's going to move. The question is in which direction based on what the news tells us. EuroCAD, another sideways pair that seems to have bottomed out. It has found support there at the bottom and has not gone any deeper since back in September. Currently trading between that level of support at the very bottom and the prior level of support resistance around the 152.25. So pretty much halfway between those two spots. Sideways pair, again, really don't like sideways pairs, but a weakening of the CAD might make this one a good opportunity if oil prices continue to drop. Pound JPY, yet another sideways pair, much the same as the Euro JPY, until there is a firm decision on Brexit that people can point at and say, okay, this is good, or okay, this is bad. This pair is going to be very sideways. However, it does move in very has big spikes. So the pip distances here are quite decent. We're talking 500 to 700 pips in each of these bounces, but you have to catch it at the right time in order to take advantage of that. When news finally breaks and we get a final decision on Brexit, this is going to be a key pair to play. Aussie JPY, yet another very sideways pair. It does give good opportunities, but again, it's very much tied to the news cycle and has to be traded accordingly. Euro New Zealand, this is probably our biggest winner slash loser of the last couple of months. We traded it down quite effectively for weeks, and it seems to have bottomed out at a prior level of support and is now doing a very weak retrace. If it bounces off that trend line, which it already looks to be happening, we may have an opportunity to trade it even further down, especially if we have some upsetting news coming out of the Eurozone regarding Brexit or their banking issues or whatever. And last but not least, our pound Canadian, also as with much of these pound pairs, very sideways because Brexit news has not been crystal clear, and we keep getting bad news one day and good news the next, and that affects, of course, this pair as it bounces up and down, helped along the way but by Canadian weakness. However, keep in mind that the CAD has been weakening significantly in the past couple of weeks, yet the CAD has strengthened against the pound as well. So if we get a little bit of respite on the UK side, then this pair is probably going to shoot up as it catches up with the rest of the currency pairs regarding Canadian weakness. So this one may be a pretty good opportunity to trade back up to around the 174 level at this level of support resistance here. So keep an eye on that one. And that does conclude our charts for the week. Some of the setups we see in progress. Again, as I mentioned, we will be paying more attention to the fundamentals as the end of the year approaches. We get into that final month. The USD is pivoting, and the stock market had its biggest correction this year in the last couple of weeks, which wiped out the entire 2018 gains in the stock market. We're essentially back at index levels from back in January. So anybody that was a buy and holder, anybody who's a straight investor instead of a trader, will be at a net gain of zero, not losing anything, not winning anything, if they just bought something at the beginning of the year and held on to it through today. I am not an investor. I'm a trader. So I've been trading the market up and down the entire year, and I'm doing quite well, but not everybody is. So a lot of people don't have the time to actively trade, and investing is the next best thing. So anybody that's an investor is pretty much at break even for the year and hasn't done much. The next month is going to be key as we get into the Fed's last opportunity for an interest rate hike, which they promised they would do, and that has been called in question. So that expected interest rate increase for December might not happen. If it doesn't happen, I'm going to expect to see a significant dollar weakening before the end of the year. The euro has been staging a pretty decent recovery, but it's not clear how far it can go. Last week, we already saw it stumbling a little bit against some of the major currencies. So again, I'm very much relying on Brexit news to see which direction it's going to take. It is overdue for a little bit of strength. The euro has had a pretty poor year, as has the pound, but the pound had a reason for it. So the euro may still get into a recovery mode between now and end of year or even January, but we do have to pay attention to the news cycle for that. The pound pairs, nothing much to say. It's going to be Brexit all the way. And the Aussie and the Kiwi, they had a very nice recovery for the better part of a month, but last week that failed. Not sure if it's a total failure or it's just a breather. So this week bears watching for any movement in either direction. Once these pairs, the Aussie and the Kiwi, which move in lockstep, once they start moving, they really tend to move pretty quickly. So we'll keep an eye on those as well. But as mentioned before, we're going to be looking more at the news and less at the technicals until we get out of this very choppy news cycle. So the market is clearly reacting more to the fundamentals than the technicals as the year goes to a close. So we will be adapting to this effectively immediately. We always adapt to whatever the market is doing. In my case, I'm going to be relying more on pending orders for my entries and limiting the technical trades to only the very, very strongest of indicators and breakouts and this and that. So adaptation is key, and that's pretty much what's going to be happening. And on that note, since I see Callum there, Callum, do you have anything to add regarding your performance, your direction, or anything else, and how's the baby and all that? Callum, I cannot hear you. I assume you're probably not connected to audio. I'll give you another minute to chime in. If not, I will move on.
Hello, can you hear me?
Oh, I can hear you now. Go ahead.
Yeah, I was just talking to myself, obviously, but I was actually saying it's pretty much the same as what you're saying. Last week we had a very quiet week. Everything sort of retracing, all our trending pairs were retracing, so we didn't make any entries. Just had a close out. So this week it's just the same again. See if we get any entries, any signals. But at the moment, everything looks like it's still on a retrace, sorting itself out. So
indeed,
pretty
indeed.
much.
Alrighty, that's perfectly fine. And I don't see anybody else joining us today. They're probably still on their holiday here in the US. So no Q&As for that. So I'm going to stop the recording right here. Thank you, everybody, for participating.